Welcome to Quantum Finance. My name is Parker. I'm the head trader here, and this is our day trading recap for Monday, November 6th. So starting here with the SPY, the S&P 500 ETF, with the daily and weekly charts. If you look here at the daily, as you can see, very small green day today with very low volume coming in. Looking at our weekly chart, as you can see, starting the week green, sitting right here below this weekly midline and right here below this previous swing high back here from October. So when it comes to identifying the trades today, I want to turn to our 2-hour chart. So if you notice here on the SPY and the Qs, we do have blue candles here on our impulse candles, which means we are in a period of consolidation. If you look down here at our trend flex, as you can see, we have a downward positive trend, which is a weak trend. Remember, the best momentum trends are going to be downward negative and upward positive, but as you can see here, we are sloping down in the positive territory with blue candles. So we were looking for more of a choppy kind of consolidation type range today, and that is exactly what we got. During consolidation days, I like to use Ballinger Bands because they are kind of a range-based type of trading indicator compared to the last trading video that I posted back here from last Thursday, which was a very momentum-based trade because we had strong upward trend. So here we're on the 3 and 5 minute. As you can see, I have the Ballinger Bands on, and you can see just kind of how the price moves and weaves between the Ballinger Bands. So starting here, I want to point out that as you can see, we did have a trend reversal breakdown from Friday's price action. As you can see, opening up right here and retesting this trend line. So I actually did like this for a short here off the rip. As you can see, I have the trades drawn out here. So yeah, there was that trend line break retest that we got today, as you can see, coming up and basically top ticking it to a T. So I did like that for our first entry point on a short, literally just shorting off the rip this morning into the strength. And I also thought the market was topped out. So as you can see, shorting up here, taking your first take profit on the break of the low of the day and your second take profit down here. And I'm going to go over why these are your profit targets. So we're going to go back to our 3 and 5 minute charts here. So I'm going to pull up those arrows here actually on the 3 minute chart. So a reason why I like this for a short, as you can see, we had the upper extreme here on the 3 minute acting as resistance. We had that trend line as well. And if you do look here at our 15 minutes, actually, you can see we had the upper extreme on the 15 minute chart right there with yesterday's highs, Friday's highs. If you look here at the Qs, we also had the upper extreme. So we had a lot of resistance sitting up here at this level. And I also thought the stock market was extremely overextended to the upside. If you look here at our 2-hour charts, as you can see, we were running into this major kind of zone of price action after a massive week we got last week. So we were looking for puts based off our Ballinger Band strategy. So as you can see, this take profit down here on our final take profit was this lower 5 minute extreme right there. So yeah, we were looking for that. When it comes to trading ranges and consolidation type days, you just want to kind of play the bands, right? Shorting up here into this upper extreme in this upper band and taking profit down here into this lower band. And this is another reason why multiple time frame is very important, because the bands will, line up differently on each time frame. As you can see, it didn't quite reach this 3 minute, but as you can see, pulling right there into that 5 minute extreme. So, and then we had our second trade, which I did like this this push up here because I was bearish, and then we saw this strength in the market here. Let me go to our 2 minute chart. As you can see, we did have an inverse head and shoulders pattern, which is a bullish reversal pattern. And as you can see, we got that bullish reversal coming in. And I did like this for our first short here. A lot of today's price action and analysis is going to be on the 3 and 5 minute chart because of the Ballinger Bands. I do not have Ballinger Bands on the 2 minute chart because I feel like it's a little bit too much noise. But as you can see here, I have this first short. I like this as a short target because, as you can see, running into this 5 minute upper extreme here, and then just a quick short down here. I did have a profit target here right into this significant level, right? This left shoulder and right shoulder here on this inverse head and shoulders pattern. I did like that as a profit target. And when it comes to taking profit on consolidation, kind of range-based choppy days, you could do it in like kind of two slots, right? You can sell like 50% here and another 50% here. But I mean, it's all relative to like your thesis on what the price action is going to do, and of course your risk management, or your, how much risk you're willing to take in the market. So as you can see, we get a strong bounce here off that head and shoulders shoulder level, pushing right back up here into that upper extreme. if you wanted to, this could have been another place to add to the short. As you can see, I have another short entry point here. As you can see, running into this upper 3-minute extreme. And then coming down and taking profits as we push down into that 3-minute extreme, that lower extreme there, and then another take profit down here. I'm going to show you why that would be the take profit here on our 15-minute chart. Like as I described, this is that low, that profit target we were just talking about, running into that lower extreme, right? Buying or getting your entry into the upper extremes and your exits into the lower extremes, especially if you have a short bias like counter trend trade like I did today. Let me go back to our 3-minute here. And I want to point out that we had massive squeezes, right? I have a whole video on squeezes. Definitely go check that out if you haven't seen it. But more or less what a squeeze is, it's a volatility compression, right? It's just a way to identify a period of consolidation, just, you know, a chop before a larger move happens, before the expansion, right? You have the compression, which is the squeeze, and then you have the expansion, right? So we had this tight squeeze here, and I was bearish because I thought the market was overextended. So you could have held this a little longer, held another piece, right? Looking for that squeeze to fire to the downside. And as you can see, that's exactly what we got. So with that final take profit down here into this 50-day moving average. And I do want to point out here on the 15-minute chart as well that we have large 15-minute squeezes, but as you can see, they fired here into the close. The market did get a strong bounce here off that 50-day level and actually closing above the open. It was bearish all day until the close, as you see that buying coming in. So we go to our 2-minute and talk about the options we were looking at. So for this first trade, I was looking at, or for basically this trade and, well, both trades, I was looking at the 435 put options. So on that first trade, say your entry was, you got kind of a good entry down here at about that 64-cent level. On that first break of the lows, you're looking at, hold on, you're looking at about a 50% gain, and on that final extension, you're looking at a 65% gain. As you can see, these options did not perform that well here off the open. I got a question on my last video about why don't I just trade futures instead of options, because you don't have to worry about time decay, especially during like consolidation type days like this where trades do take a lot longer. Futures would be a nice way to trade this market instead of using options, so you don't have to battle the time decay. But here on this second trade, we'll say you got in down here on that push up into that upper extreme. Your entry is about 47 cents. On that first take profit, you're looking at a 50% gain. And then we'll say you came in added here on that other retest. So looking about that same entry, about that 48-cent level. On that second take profit, you're looking at about a 36% gain. And then on that take profit into that lower extreme on the 15-minute, you're looking at an 88% gain. And this is that exponential profit potential here of options, looking at about a 190% gain here on that flush down to the 50-day moving average. So pretty wild price action, as you can see, very range bound type price action, you know, wicking off that upper extreme here on the 15-minute chart, squeezing down through that lower extreme, and then you can see that lower extreme kind of catching the bid down here after that squeeze fired, and then getting that nice bounce to the upside. But yeah, we are currently in a period of consolidation, but we did have that nice move, you know, into the close with that buying coming in. So we might get some more move here up towards the upper end of this kind of price action here. As you can see, this wick right here coming into tomorrow. But yeah, definitely going to be interesting to see what happens if we do get that rollover, if this market just keeps on ripping higher. But yeah, that should do it for the video. Appreciate y'all watching, and I'll talk to y'all later.